Hi everyone, Anna is back and Daily Juice. How you guys been? I hope wonderful. I want to chat with you a little bit about retirement savings plans. This question actually came up twice today in conversations with clients, and my husband asked me a question about what type of retirement plan does an individual who owns their own business and does not have employees need. Somebody who works for themselves, they don't necessarily have a formally structured business, or someone who is maybe a consultant, right? And they're doing some consulting work on the side. Now, this is a relevant question to talk about because we have a little less than 2 months until the end of the year to reconsider and rethink the savings that we can do into our retirement plans. So I want to cover with you a couple of options that exist that are really easy to set up in terms of these plans, right? Because a lot of my focus in the past has been helping you guys who work for companies to talk about benefits, but what about everybody else? So as you hop in here in the chat, say hello. I'd love to see who's coming in, and I hope you're doing well. Otherwise, I can't see your comments and I don't know who's here. So I want to talk about making things easier in terms of what you can set up for yourself, right? Because that's probably the last thing you want to worry about, but we got to think about longer term and plan for retirement. So what I want to start with is suggesting two types of different plans. One is called SEP, which stands for Simplified Employee Pension, and another one stands for a simple IRA, right? This is when you start adding employees and you want to give them options to contribute. So let's talk about a SEP. A SEP is a really easy plan to set up for yourself, right? And what happens is that you have until the deadline when you file your tax return to make contributions. So let's say during the year, because of your maybe business cash flow is not stable, you all of a sudden at the end of the year or maybe in the middle of the year had a big influx of cash. You can fund your SEP IRA, right, during those periods, or what you do is when you're filing your tax return, and your accountant will actually tell you what your amount of contributions that could go in. But it's something like 25% of your net income after deductions. So it could be as far as the 2017 amounts, and we still have that until we file our tax return in April of 2018, or if we file for an extension. So it could be as much as 54,000 going into that account. Hi Brittany, thanks for hopping on. So if you had a really profitable year, that's one way to defer money. So now I'm talking about not just in terms of savings for retirement. We have to remember the contributions into this type of account goes pre-tax. So that means you're going to be saving on taxes for this particular tax filing year. Now, if you want, if the $54,000 in contributions is not enough for you and you had a much more profitable year in terms of your business, then something called a solo 401k is what you need to consider. Now, solo 401k, just like a regular 401k, if you ever had one before, has two options to contribute. It has an option for you. So if you're running a business, you have two options. If you're contributing as an employee, that is in 2017, $18,000, you can defer that. But because you're the owner of the business, you can also contribute as an employer, and that's called a match. And 25%, up to 25% of your compensation, right, could go into that. So it's actually 100% of your compensation, or $54,000. So it gives you just a little bit more flexibility in terms of, or a larger amount in terms of what to contribute. The structure of these accounts is the same, right? If you want them to be Roth, meaning you want to contribute after tax dollars, you can do that. Most people look for tax deductions. So we're talking about just making traditional contributions. Now, if you want to add employees and start offering them a retirement plan, then initially you can have a SEP, because this is what happened to me. We initially had a SEP when it was just Jim and I, and then as our company grew, we added employees, and so we've converted our plan, our SEP plan, into something called a simple IRA. So that's where employees can defer their monies and an employer can give an additional contributions on the top of that. But I challenge you to think about what you're going to do in terms of savings for your retirement, right? And I know that sometimes, or a lot of times, you're not focused on that because you're focused on running your business. But you have to step aside and think in terms of, will it help you with reducing your taxable income, therefore paying less taxes, and will help you fund a larger goal, right, which is saving for retirement. That's all I've got for you today. Consider doing these types of plans, and you have some time until the end of the year, particularly with the solo 401k. You've got to set it up before the year ends. So let me know if you have any questions, and perhaps maybe there are the types of retirement plans that you've considered for yourself and you want to share. I'll see you guys tomorrow. This is Anna and Daily Juice. Have a good night.